Now, the great barbecue conversation after a long weekend, often pretty. So we're going to talk about today where we think 2024 is going to end with property and where we think it's going to start in 2025. Stay tuned.
I don't think many people like putting their neck on the line with property predictions like this.
Yeah, I don't think a lot of people have been through the cycles either. You know, they're just judging the last cycle or the next cycle. But even more importantly, at Novak, we've got the I Love DY magnet, fridge magnet. That's right, kids. Look at that.
One thing you can expect in 2025 is those on your.
Lots of fridge magnets over DY. 30,000 of them everywhere.
Wow, good to know.
Oh, a bit excited. So Billy, what are your thoughts on the market ahead? Obviously, have you seen any changes the last couple of weeks? Would be the first question. And where do you think she's going to be heading with property? Let's not forget to cover rentals today as well, because I think that's a critical topic for tenants that are watching and landlords that are watching.
Yeah, absolutely. Well, let's just give a recap of what the last 9 months has been, 10 months has been.
And commercial.
Overall, since the started running, we came into the new year with really, really low stock levels. At Christmas Day, obviously on 25th last year, there was only about 350 odd properties on realestate.com, and that didn't really change for the first 6 to 8 weeks. So the first 2 months, really, there was quite a low stock environment. And then it did slowly start to pick up, but right across the board, I think everyone was feeling that lack of stock, which was pausing people with any kind of move. People just didn't want to sell because they weren't know where they were going to buy. People didn't want to buy if they just didn't have the choice and they felt like they were paying overs. That was probably the biggest standout at the start of the year, stock levels.
And now?
Now we're sitting at a pretty balanced level. Put it into perspective, from Christmas Day, it's doubled and a bit more. We're sitting at just under 850 properties on realestate.com. That's a good metric as well, because a normal sort of year, a high mark, a market with sort of high stock levels, that could be as high as 1,200, and if it was really low, it'd be around 600. So we're sort of sitting somewhere in the middle. It feels balanced as well. I think the buyers can feel that.
Now, if you're not part of the Northern Beaches and you are a different part of Sydney, I do have to say, after talking to our real estates at our friends at realestate.com.au, what I have noticed is with their national data, we do often respond the fastest. So through COVID, the direction the market was going, we saw start in the Northern Beaches. Through GFC, we do find that often it's a little bit of a trend set of the Northern Beaches of where the rest of the market is going. So I would encourage people to take heed as to what we're going to be telling them, because I reckon most of New South Wales, most of Sydney, I reckon will follow with what we think is going to happen.
Yeah. Now, setting the stage for 2025, here's what's kind of exciting. It's not just what's happening on the property market that I guess impacts us and is the be all and end all. We're very, very reliant on sort of tracking what happens overseas, and largely impacted what happens in the sort of greater economy. So economists are looking at also not just what's happening locally, but what's happening with interest rates in America, what's happening with interest rates, across other countries. There's been a good couple of examples with interest rates coming down in the last 3 months. That happened in the US, also happened in New Zealand. So that's one. That's one sort of metric to look at. Another metric is inflation. They've curved that higher inflation and sort of got it back into that 2 to 3% range that the government feels good about, Reserve Bank feels good about, and then GDP as well. All the sort of those three metrics are looking, more so in the green than they have been in the last sort of 9 months from the beginning of this year.
And also when I'm passing commentary, I've been an agent for 30 years of real estate cycles. So I've witnessed previously wars, and how it affected our economy and property market. And don't forget that my predecessor, my father for 30 years was a real estate agent. So I'm bringing all of those optics and all of that knowledge and wisdom into this conversation. Something that I do find is, and what's happened, what I think people easily forget is it's been really tough times with interest rates. We've had sort of 25 months or 6 months where the market's been in a level or rising interest rate market, mostly rising the interest rates through that time. What I really find specifically interesting is it's actually rock and rolled the whole way along. So there's been consecutive growth with property prices across most parts of New South Wales or New South Wales metrics. But when you look at RP data and their metrics or what they do, there's been a lot of growth there, and that's been when the rates have sort of gone up from an average of something like 2% to an average of something like 6%, and the property market was so resilient. I just can't help but to think of what the market's going to do when those interest rates, the variable drop, the fixed have already dropped.
Yeah, that's spot on. And like those inflation trends and those interest rates, they're supposed to put pressure on the cost of living and affordability, a downward pressure. And it did.
They did.
But it's not in all cases showing the impact on property prices. So that's the thing that I think people are most intrigued to keep an eye on for 2025. What about sort of the demand itself, Mark? Has there been, it's interesting, we were talking with some brokers from Commonwealth Bank, from Shore Financial, another local Mossman, and another broker up the other end of the beaches. They all unanimously seem to be saying that there's more pre-approvals than ever before.
NAB. Yeah, look, I was fortunate to have a one-on-one with a CEO of a major bank. Now, I can't tell you who it was, but I can tell you they said they're sitting on a historic high amount of pre-approvals. Naturally, I said, what does that mean? And they said, well, in the history of our bank, we've never sat on so many pre-approvals and issued them out to buyers that are sitting on them in the history. So bear in mind, generally when banks issue an approval, it's for about 90 days, right? So these cats have got 90 days to go out and spend it. And these cats, there's more of them than ever. So, if you're thinking what I think, which is life's tough, interest rates are high, think again. In probably the majority of the banks at the moment, they're sitting at historic high pre-approvals. So people can and do have the capacity to get the money.
Yeah, and there are properties that translate into big open home numbers on a weekend. There are some price points, I think, particularly what we consider the affordable sort of, large 2 bedrooms instead of a townhouse, or the townhouses instead of a house. That's the stuff that's sort of pulling the really big numbers at the moment. But even the quieter opens, we're doing 3 open homes a week, Wednesday, Saturday, and Sunday. Even the slower ones, they're still getting sort of 2 to 3 groups at a minimum. Some of these are pre-market, not even on realestate.com. The buyers are finding it through other portals.
So I'm seeing like houses are basically up a little, and I'm seeing units as up a lot. I reckon the unit performance in our area in the last 12 months has been very, very good. Now, guys, if you haven't realised and you've got to watch this in your suburb, have a look what your suburb's done the last 10 years. It's very hard data to put your finger on. You will get it from RP data. But if your property values across Sydney, most parts of Sydney have doubled every 10 years for the last 50, 100 years. So they've done double. And what does that translate to in a percentile? It's 100%. So if the property market has done 100%, that's what it translates to. Now, 100% growth. So I do have to say, in our core suburb of DY, units have gone up in the last 10 years 70%. Units have underperformed. As much as it hurts people to hear, that's the fact. And whenever I've tracked DY, it's generally always doubling every 10 years. Now, what's really interesting is, what have houses done, Billy? What have you seen houses do over 10 years?
Houses have doubled and done more, so they're probably sitting close to 130%.
Yeah, and that's across most housing suburbs on the northern beaches. So I'll put it in summary. Units have not doubled in 10 years. They've done about 70% in our core areas. Houses have done 130%. They've doubled plus 30% on average in most housing suburbs in our area. So on that trend, I think units will see more growth than what houses will see over probably the next 1, 2, 3 years. Now, what's really going to fuel this and what's really going to underpin this is affordability. Your interest rates, it just makes sense that when life was at 2% or 3%, you'd spend more and you'd probably go to a house or do the upgrade. When life sits at 6 or 7% interest rates and the stretch is stretchier, then naturally what's going to happen naturally is the units, that more affordable market is going to do better. Are you still there, Billy Bob? You gone? You turn the lights out.
You can hear me, but yeah, I'm in the thinking stage. I am here, guys. Trying to fix it in the background. It's and are you seeing this across rental and commercial as well? I know that obviously those metrics won't apply, but
look, we manage 2,000 rental properties. We're one of the largest property managers in Sydney, and we have noticed the last 3 months no growth with rentals, but there has been catch up. So, and this is a conversation we had with the team yesterday. Last month, 2 or 3, zero growth, but anything that's getting relet is getting an extra maybe $50 or $100. Why? Because there was a period there of 1 or 2 years where there was growth. So we're just making that catch up or making that adjustment in resi rentals.
Yeah, there you go. Well, that is the sort of the summary for 2024. Predictions going into 25. I reckon we're going to see a busy, active market. Rates that come down tend to translate into borrowing capacity. So for every 1% change in cash rate, there's a 10% positive impact on people's borrowing capacity. And people that have 10% more to pay will generally put that into their purchase straight away. You know, they're not fussed about what price they pay. They just want to get in. So if it's 800 or 850, they'll do it.
And I think all of the big four are punting reductions in rates as much as 0.75 to 1%. So that's a huge reduction. That's almost 15% change on your repayments.
Massive. It's huge.
Happy days.
I'm joining back for the end of the show. Happy days. I think
You came out of thinking mode.
Yeah. If you're sort of not talking to a broker, but you want to be in the market though, now it's sort of time to be striking conversations.
Legends. Billy, have a good day, everyone. I hope that helped you out there. I'm pretty optimistic on the next quarter or two on the property market. It's going to be interesting to watch this back and see if it was true.
Lisa reckons 10 to 20%.
So buying now's ahead of the curve.
Yep. Buying now, you're ahead of the curve.
There you go.
And I'm seeing long settlements as well. Buyers are nervous about moving before Christmas, but you still got 10 weeks under your belt. 10 to 12 weeks.
Oh, that's a good number. 10 weeks till Christmas.
Yeah, like people are nervous about, buying and selling this time of the year, but people are doing it and they're getting long settlements approved. Sometimes the end of the year, sometimes January, and they're making things happen. So don't let that stand in the way.
Love it. 10 weeks to Christmas. Get in. Rental market stable. Office market and commercial shit itself a little bit. And all the other assets are very stable in commercial industrial.
Yeah, right.
See you, Billy Bob. Bye, everyone. I hope this helped you today. I'm going to say bye.